Now your back-end ratio, which is pretty much your full debt-to-income ratio. Your back-end ratio pretty much includes everything that was the front-end ratio. So everything that had to do with the house, plus any credit card payments, car loans, student loans, alimony payments, child support payments, any official payment, mainly like a debt accrue or a legal judgment. Any legal judgments, like you go through divorce, you have to pay your wife such and such. That's a legal judgment. That counts towards your debt-to-income ratio. I learned tax payments as well. If you show that you, let's just say that you owed $10,000 in taxes last year and you're on a monthly installment plan, if they see that, which they most likely will when you do your tax forms, you're gonna have to add that to your debt-to-income ratio. So whenever you take from a lender, that's gonna be added on your plate. Because they're like, okay, you want a big loan from us. Who else do you owe and how much do you owe them? So alongside of saying, do you pay on time? How much do you owe? Let's just say you have 5 or 6 different student loans, right? They take your total amount of student loans. Let's say $90,000 in student loans. Now they're gonna take 1% of that. I think it's $900. And they'll add that to your debt-to-income ratio. So debt-to-income is basically everything that you're paying monthly. Accrued debt, gathered debt that you've been stacking up. What they usually look for, from what I know, conventional loan, which is a type of loan that's not backed by the government. We'll get into that in another video. Conventional loans, they'll take up to 45%. So as long as all your accrued debt, including the front end debt, is no more than 45%, that's a positive step in getting approved for the loan. Now, FHA, which is a federally backed loan, government-backed loan, they usually take up to 50%. Now, all of this also has to do with how much money you bring into and how much money you putting down. It's a numbers game. Let's just say you have a credit card bill, a credit card with $1,000 limit. They won't say, oh my God, you have $1,000 credit card. We're gonna add that. They're gonna take how much you have revolving, your credit utilization. That'll be another video. But basically, you got a $1,000 credit card, right? When it reports to the bank store, you only have $100 that you swiped, that you've used. Okay, we're gonna take the $100 payment because that's all you're using. Yeah, sure enough, you were approved for $1,000, but you only have $100 revolving. Now, if you know anything about a house, get that down low, because revolving credit or revolving debt can really help. But if it's too high, over a certain percentage, it can hurt. So if you know you're buying a big purchase, keep about $10 to $15 revolving, so it doesn't hurt your debt to income, or DTI. But yeah, that's pretty much what debt to income ratio is. The percentage that you owe to debt per month versus what you bring in per month. That shows a lender, can you afford whatever the big or small purchase that you're asking for? Because the way the mathematics system works is, 9 times out of 10, if you're over 40 to 50% of what you're bringing in, you might foreclose on whatever you're trying to buy, especially a home. So I need to know that you don't have that much on your plate, so that my loan is priority, that I'm gonna get paid. Because at the end of the day, they just wanna get paid back. So a lot of self-employed people, we need to know that debt to income is very important. All right, so pardon my handwriting, but we're gonna get through this. Another question that I used to always ask or Google is, how much money do you need to make a year to get this kind of house? How much money do you need to make a year to get this kind of house? Small deciding factor versus your DTI. You can make less money and have less debt and get qualified for a higher end home versus someone who makes more but has more on their plate and doesn't have the cap space. Talking in sports terms. So let's break it down, all right? Example, let's just say I make $100,000 a year, right? $100,000 annually, gross, before taxes. Now, if you're self-employed, most likely they're gonna want 2 years tax returns. So you can either claim $70,000 1 year, $30,000 1 year. I think that equates to $200,000. $200,000. They'll divide that by 24, and that'll give you an average of $100,000 or $8,333.3 a month. Or you can just claim on your taxes $100,000 1 year, $100,000 another year. Same math, right? Like I said, this will all be broken down in the tax video. But for right now, debt to income purposes, let's keep moving. So after my division, after they divide, they'll break my income down into monthly increments, right? Now monthly I make $8,333. Now they have what they have you can call it a pyramid or a house king, right? They'll take that divided by 2. That'll already give me 50% of 8,333. So they'll break my monthly gross income down to 4,166. Because like I said, they're gonna start me off at 50% anyway to see where I'm at, right? Now, the other 50% does not matter. They do not care about the other 4,000. They need that as cushion. So this other 4 over here is cushion. They won't calculate it. Doesn't matter. So you only have 4,166 for all of your debts and accrued debt to go under, front end and back end. So now we're at 4,166.6 is my 50%. So let's get down here to my bills, all my accrued debt. All right. So let's just say I have a $300 car note. I have $200 revolving on my credit card balance. I have $50 in student loans. Let's just say that's my monthly payment, right? Now, this is my debt so far accrued, not including my potential mortgage. Now, when you go to buy a home, they're going to factor in the house that you're looking to finance into your debt to income to see if it fits on the side of the pyramid, right? Because if you're going to have this house, they have to fit it with your regular bills. And let's just say my mortgage is $2,500. Now, this $2,500 is my front end ratio. Remember? Because my $2,500 for this mortgage for this house, that includes my PMI, my mortgage principal, which PMI is my mortgage insurance. It includes all my taxes. It includes my HOA. Everything that's to do with this house comes to $2,500. So that's my front end ratio. Front end ratio is $2,500. Now, once I add in my car note, credit card balance, student loans, plus my mortgage, now you get my back end ratio, which is my total debt to income ratio. That comes out to be 3,050. Now, my front end ratio might be a little high, 30%, because they usually might want 21%. But my total DTI, debt to income ratio, is 36%. Now, that looks pretty dang on good to a lender, because you know what? Even with the debt that he asked from the loan that he's trying to borrow from us, he's in great shape. So that can be one deciding factor that can help you out, debt to income ratio. So it's not always about how much you make, it's about how much is on your plate versus how much you have bringing in. Remember that. All right, so I really hope this video helped you, help you all. Like I said, I have a lot of great videos besides cutting hair that I'm about to drop, because it's deeper than that, man. Like, I'm trying to help build financially stable, financially available barber that I can. Because a haircut will only get you so far. If you have a great haircut with bad credit, what's the purpose? But sometimes bad credit is due to negligence and not knowing. And it's okay. We have to learn somewhere. So I really want to help you guys. Please subscribe, like. I got the tax video coming. I got the credit video. How to understand your credit, what's going on, how to help your credit, how to prevent certain situations. What is a conventional loan? What is an FHA loan? How do you get qualified? What's the difference between a government-backed loan versus a non-government-backed loan? People might not know, to get an FHA loan, you have to account for your spouse's debt as well. Conventional loan, you don't. So it's a lot of little things that I'm learning as I go along that I really want to help you guys learn. Stick around, a lot of great things coming. Hope you enjoy it. Like, subscribe, share this video, because it's deeper than hair cutting hair. It's for all entrepreneurs. All right, I got a lot of great art on my wall. Trey Wilder did it. At Trey.Wilder, man. WILDER. I'll expose the whole thing. I'll show you guys the whole thing soon. But man, it's fire. See you soon. Like, subscribe, GameChanger out. All right.